Investors, hello. This is Stock AI Insights, your chief AI analyst. A quick reminder, this is for educational reference only and not investment advice because all investing involves risk. Today, we're parsing what was said in Walmart's Q3 2026 earnings call, which dropped on November 20th, 2025. So let's break down what the data is telling us.
All right, let's jump right in. The headline here, and you really can't miss it, is that Walmart absolutely knocked it out of the park this quarter. They didn't just meet Wall Street's expectations, they blew right past them.
And when you look at the numbers side by side, you can see just how big this beat really was. On one side, you've got what the analysts thought would happen, and on the other, well, that's what Walmart actually delivered. It was a solid beat across the board on both revenue and, more importantly, on earnings.
But let's really zero in on that earnings per share because, wow, we're talking 77 cents per share. That's a full 28% higher than the 60 cents everyone was predicting. That isn't just a small beat, That's a huge signal of just how profitable their operations were this quarter.
And it wasn't just on the bottom line. The top line, the revenue, tells a really strong story too. They pulled in $179.5 billion. That's almost 2.5% more than expected. Now sure, that percentage might not sound as jaw-dropping as the earnings beat, but you gotta remember, for a company this size, that's billions of dollars in extra sales. It really points to some very strong consumer activity.
Okay, so when you see numbers like these, the next question is always, why? What was the secret sauce this quarter? Well, digging into the call, the answer becomes crystal clear.
The data points to one specific area that was, well, it was just on fire.
And here it is, a massive 27% jump in global e-commerce sales compared to last year. 27%. And get this, it wasn't just one part of the business carrying all the weight. The report says that every single segment saw online sales shoot up by over 20%. If you ever wanted proof that Walmart's huge bet on its digital strategy is working, well, this is it. It's paying off in a huge way.
So when you have a quarter this strong and your e-commerce engine is firing on all cylinders, what do? You get confident. And that's exactly what Walmart's leadership did. They sent a really strong signal to investors about what they expect for the rest of the year.
And this is what that confidence looks like in hard numbers. They've officially raised their guidance for the full year. See how the new range is not just a little bit higher, but it's also narrower? That's a subtle but really important detail. It means they're not just optimistic, they're certain. They have a very clear view of their performance, especially as they head into the all-important holiday shopping season.
But the earnings weren't the only big news from the call. There was another bombshell, and this one isn't about dollars and cents. It's about identity. It's about how Walmart sees itself and how it wants us to see it in the years to come.
So here it is. On December 9th, Walmart is packing its bags and moving. They're leaving the New York Stock Exchange, their home for decades, and moving their stock listing over to the NASDAQ. Now, for a classic blue-chip company like Walmart, this isn't just some small administrative change. It's a huge symbolic statement. It's very, very deliberate.
And they're not being shy about why they're doing it. This quote says it all. They see themselves as a tech-powered omni-channel retailer. By moving to the NASDAQ, which is home to all the big tech giants, they're basically shouting from the rooftops, hey, we're not just a big box store anymore. We're a technology company that happens to be in retail. It's a fascinating repositioning.
So, let's recap. You've got a massive earnings beat, a raised forecast for the year, and this bold strategic move to rebrand as a tech player. The big question is, how did the market, the investors, take all this news?
Well, they loved it. The stock shot up over 6% right after the news broke. That's a pretty clear vote of confidence from investors. They're not just buying into the great quarter, they're buying into the future story that Walmart is telling.
But to really understand how strong this performance was, you have to look at it next to the competition. And when you put Walmart's numbers up against its main rival, Target, the difference is just stark. It's like they're operating in two different worlds right now. Walmart smashed its revenue numbers and raised its outlook. Target, on the other hand, missed on revenue and had to cut its forecast. It really goes to show that Walmart seems to be navigating the current economy a whole lot better.
All right, so let's pull all of these threads together. What's the final takeaway from our analysis of this call?
Verdict: Walmart's strong e-commerce growth fueled a significant earnings beat, prompting a confident outlook and a strategic pivot towards a tech-focused identity. It really leaves you wondering, though, is this move to NASDAQ and this tech-powered identity going to be enough for them to get that higher tech-style valuation from the market down the road? What do you think? Share your thoughts in the comments. See you next time.